Fed Chair Kevin Warsh is speaking at Jackson Hole this morning, warning that inflation has not improved meaningfully. He says the Fed has work to do if inflation doesn't move toward its 2% target. And Warsh is rejecting forward guidance, saying markets shouldn't look to the Fed for their next trade.
Make sure we're not setting forward-looking policy based on stale or inaccurate data. Nor should we rely on isolated data points. Trends matter most. The Fed's a decision-making agency. We make choices amid uncertainty, and the data upon which we draw must be relevant, contemporaneous, accurate, and as actionable as possible.
Let's go live now to CBS News Morning Watch correspondent Kelly O'Grady. Kelly, I feel like Warsh on purpose tries not to say much at all. So I'm curious about what your takeaways were from his stance on forward guidance.
Yeah, that's exactly it. It feels like he doesn't talk, he whispers in comparison to previous Fed chairs. And you and I would talk a lot during the reign of the previous Fed chair, Powell, and I used to say, oh, we never get much out of Powell. Well, I stand corrected because we have someone who speaks even less about forward guidance. But that was really the takeaway of this speech from Jackson Hole. You know, this is something that the Fed chair does every single year. Investors watch it for clues of what the Fed is going to do. It's a very important moment. And of course, this is his 100th day in that office today. And he said, look, we are not going to be in the business of sharing what the Fed is planning to do on interest rates. And something that he said previously to back that up is that we're in such a changing environment with what's happening with inflation, with the war in Iran, with what's happening at the job market, that sharing forward guidance and having the market react to that, well, it's very, very quickly changes that in a few weeks, things might be different and that guidance might be different. And so he's really focused on taking his own cues from the market when data comes out and how investors react to that, whether it be inflation or job data. He's sort of saying we're looking to see how investors are interpreting that versus be the thing that investors interpret. It certainly caused frustration, I think, amongst the investing community because traders like to see that, but economists have praised him for being a little bit more even-keeled because we are in such a tumultuous time economically.
Okay, so given that he's a whisperer, as you put it, did his comments give us any signal about the Fed's approach to inflation heading into the September meeting?
Yes, and this is where I was a little bit surprised in terms of how firm he was in talking about inflation. I'll just read a line for you. He said, while this summer's inflation readings were better than expected, they do not tell me that underlying trends have meaningfully improved. And if you remember, the past two inflation readings have showed inflation moving in the right direction, but there's always that pesky question of what's going to happen with oil prices and the war in Iran. Those things can change really quickly. And so what everyone that I'm talking to has been saying about that particular comment is that he did not take a rate hike off the table in September, which everyone had sort of breathed a sigh of relief after that last inflation report and the fact that we had a more tepid jobs report saying, okay, the Fed's going to stay in wait and see mode. We're not going to have a rate hike. But Mugo, there is a website that tracks investors betting of what's going to happen at the next Fed meeting. And so before he spoke, there was a 42% chance we were going to get a rate hike in September. Immediately after he spoke, it's now at 58%. So now a majority think, based on what he is saying, that inflation is sort of too high and they might have to hike rates. But again, that wasn't Kevin Warsh. That was just investors interpreting his comments.
All right, we shall wait and see for what actually happens. Kelly O'Grady, thanks for your time. Appreciate it.